Today's presentation will be an introduction to cryptocurrency. I personally find it a pretty interesting topic. It kind of combines technology more with business and finance. Just about what we're going to be covering today, we'll start by going over what exactly a cryptocurrency is. We'll look at the different types of cryptocurrencies. We'll look at the history behind it, and then how we can use it, and then the different pros and cons with cryptocurrency. So let's start out with the basics of cryptocurrency. Cryptocurrency is a digital currency, which is an alternative form of payment created through encryption algorithms. Basically, there are secret codes, and it's done through the blockchain technology. For those who don't know, the blockchain technology is basically a database where we track who has what amount of cryptocurrency and then the different exchanges of them going around throughout the markets. Essentially, what it comes down to is some that on the blockchain technology, if you have an internet connection, you can connect into it, and then you'll be able to use that technology to transfer money between different people, between businesses, and then on the blockchain technology, it will basically be a database for where all these transactions are recorded. And as digital money becomes increasingly widespread and coupled with an estimate that more than 50% of the world's population owns a smartphone, some believe that blockchain technology will overtake the banking industry's old technologies. And the use of encryption technology means that cryptocurrencies function both as a currency and as a virtual accounting system. A defining feature of cryptocurrencies is that they are generally not issued by any central authority, rendering them theoretically immune to government interference or manipulation. So now let's look into the different types of cryptocurrencies. The most popular type of cryptocurrency is called Bitcoin. You've probably heard about it. It's in the news a lot. Um, what I find very interesting with Bitcoin is that it has a limited supply, so that only I think it's 21 million of them are out there. So with that, it means that unlike a traditional currency, there won't be as much inflation with Bitcoin, and it's going to do a better job of keeping its value. So as I said, it's the most popular type of cryptocurrency, and it's seen by many companies as a legitimate use of payment. It's being adopted more widely in the world. A lot of companies are starting to use that and accept that as forms of payment. A lot of people are using Bitcoin as a form of investment, and it's making its way onto Wall Street as more banks and different investment funds are looking to buy Bitcoin as part of their investment portfolios. And then the second one is Ethereum. It's the second most popular cryptocurrency. Unlike Bitcoin, it doesn't have a limited supply of Ethereum on the market, meaning it's kind of more like a traditional currency where the amount of currency out there could rise and drop. Um, and then utilizes smart contracts that compel parties not to break their agreements and contain mechanisms for refunds should one party violate the agreement. I equate Bitcoin. Bitcoin is more like gold, and Ethereum is more like cash. If that comparison helps you understand a bit better. Looking at different types of cryptocurrencies, the third one we'll look at is Litecoin. It was released in 2011, and it has a similar structure to Bitcoin. And it's often cited as the second or third most popular form of Bitcoin. Ripple is the fourth form of cryptocurrency, and it has a quicker system that speeds up transactions, confirmations, and blockchain creation times. Ripple, however, is more vulnerable to hackers and different kinds of fraud. So now let's get into the history behind cryptocurrencies. The idea for cryptocurrency was introduced in the early 1980s by David Chaum. He created algorithms that made secure and unchangeable information exchanges between parties possible. About 15 years later, Wei Dai created B Money, a virtual currency similar to the ones today. However, this one was never really used as a real currency. Um, let's talk about the first appearance of cryptocurrency used for exchange. Bitcoin was released in 2009 by someone who goes by the name of Satoshi Nakamoto. The interesting thing with Satoshi Nakamoto is that people know that he goes by this name, but people don't actually know who he is. So it's a big conspiracy, people trying to figure out who Nakamoto actually is. And then by late 2010, the alternative cryptocurrency made an appearance. This is also around the first time the first public exchanges of Bitcoin happened. In late 2012, WordPress became the first major seller to accept Bitcoin. Now, many companies see it as a legitimate form of payment. So, now let's get into how to use cryptocurrency. To buy cryptocurrency, you will need an online wallet. This is an app that will hold all of your digital currency. They can be stored on a cloud, on an internal hard drive, or an external storage device. A backup is always recommended to record all the cryptocurrency, and these wallets are somewhat vulnerable to hackers, and they can get a hold of your personal information using them. To exchange Bitcoin, you're going to need a private key. You will need a private key. It's like a passcode. The private key will be 78 digits long and can be either chosen by you or by a random number simulator. If you lose your key, your currency uh, your currency is worthless as it cannot be spent. It is recommended that you store your key on multiple digital locations and also write it down on a physical copy. And trust me, there are tons of horror stories of people forgetting their keys. And once they forget their keys, they don't have access to their money. So it's all basically gone. So, yeah, if you plan on getting into Bitcoin, make sure you write down that private key so that you don't lose all the money that you have. Let's get into how to buy cryptocurrency. There are many different websites to purchase cryptocurrency on, such as Coinbase, Gemini, BlockFi, Kraken, Robinhood, and eToro. I'd say be careful when you buy cryptocurrency because, first of all, you want to make sure that it's on a site that is trusted, that you can trust. And also, one of the things that can happen when you buy cryptocurrency is that you might not buy the cryptocurrency directly. You may just buy something that tracks the price of it. So if you buy only something that tracks the price of cryptocurrency, you won't be able to use it to exchange. So if you do plan on buying any cryptocurrency, make sure you do your research on what buying the cryptocurrency allows you to do. So here's a bit more on how to buy cryptocurrency. Different websites have different steps when purchasing cryptocurrency. Usually, you will set up an account, then transfer real money to buy the cryptocurrency you wish. Each type of currency has a different value, but you can put however much money you want to into it. Buying cryptocurrency can be comparative to buying your traditional stocks. A good way to spend your cryptocurrency is to connect it to your debit card or prepaid card. This is a good option because you will be able to spend cryptocurrency much like you spend cash. There are many different types of cards you can use, so make sure you speak with your bank to see which ones are possible for you. And these cards will most likely involve more fees. Another way to spend cryptocurrency is to find merchants that will take it directly. So instead of using your debit card and going through the bank as kind of like a middleman, you can transfer money directly from your wallet to the merchants. Some stores do see cryptocurrency as a real form of payment and are willing to accept it. Some examples of these companies are Microsoft, Subway, Twitch, Overstock, Home Depot, Starbucks, and Whole Foods. One of the concerns is the environmental impact of cryptocurrency. Many skeptics and environmentalists have raised concerns about the energy consumption of cryptocurrency mining, which may cause increased carbon emissions. And then I mentioned cryptocurrency mining. Bitcoin mining is the process by which new Bitcoins are entered into circulation. And it uses very sophisticated computers that solve extremely complex computational math problems. So you can't use your MacBook or any of those. You need to buy like a real big computer, and it's working all day long and solving these really hard math problems, and then you get paid a certain amount of Bitcoin, or and then new Bitcoin gets circulated into the markets. Back to the environmental impact. By the latest estimates, the Bitcoin network uses 121 terawatt hours of electricity every year, and that's as much as the entire country of Argentina. 65% of Bitcoin miners are located in China, and a country that generates most of its energy from coal. So if it's using a lot of that energy, it's going to directly translate to increased carbon emissions. The Bitcoin network also has 11.5 kilotons of e-waste every year. So that includes things like batteries, motherboards, and all that kind of internal tech hardware that gets thrown out every year. So it's kilotons. So that's quite a lot of waste from it. And then not all cryptocurrencies have significant environmental impact, and many of them don't use mining at all. So those cryptocurrencies are starting to come up a bit more now, and they'll probably overtake some other kinds of cryptocurrencies because companies want to use cryptocurrencies that have better environmental impact. I'll tell you one example of that was Tesla. Previously, they said they were accepting Bitcoin, and then partway through that, they stopped accepting Bitcoin because they realized that the environmental impact of the Bitcoin mining goes against their visions for a sustainable future. So that may be something to watch out for and be concerned about going forward. So now let's get into some of the pros and cons of cryptocurrency. Starting with the pros, it's easier to transfer money between two people because there's no third party. So you don't have to go through a bank or a credit card company. You can just, it's almost like handing cash to another person. You don't have to wait for processing or any kind of things like that. Uh, Another pro is that there are minimal processing fees and purchases are much more discreet. So they're very secretive purchases, which can be good and which can be bad, which we will explore in just a second. And then it makes it nearly impossible to double spend or use counterfeit. Because everything is maintained on the blockchain network, there's very little chance that someone will be able to use counterfeit Bitcoin or anything like that. Another pro is it's very secure. The encryption technology makes sure that transactions don't get hacked through, or accounts don't get hacked. And then another pro, which I'd mentioned earlier, is that since some of the cryptocurrencies have limited supply, they're not subject to the traditional inflation. And that's also partly because that there's no government interference with cryptocurrency. Now let's get into the cons. And as I said earlier, one of the cons is that since it's a lot easier, or since the purchases and transactions are a lot more secretive, it makes it easier for money laundering and tax evasion and other different kind of financial crimes. And I think as we go forward, we'll see a lot more of those crimes take place using Bitcoin. If you've been keeping up with the news lately, I think it was maybe a month back, there was the oil pipeline hack in the northeast of the United States, and the people who had hacked were asking for Bitcoin because it's a bit more secretive and they could get away with it a bit easier that way. Um, Another con of Bitcoin is that it usually has a no refund policy. So you can't really get your money back if you're paying with cryptocurrency. Even though it's quite secure, there is still a bit of a risk of hackers, which does also come with the bank. But instead of having a bank, since there is no bank, there's a lot less security, and there's not someone to stop a hack from happening. Digital wallets and keys can be lost. So, as I said earlier, if you lose the passcodes or the passwords, you can end up losing a lot of money, and the price can crash. And as of now, it's very unpredictable. So, let's take a look at the chart of Bitcoin over the past few months. Here it is here. So it's very volatile, meaning the price changes like by the day, by the second, and it's prone to big swings. So about a year ago, it was trading at $9,000, and then it had a huge rise throughout the year. It peaked at around $60,000, but at the same time, as it goes up a lot, it can also come down a lot. So as of now, it's just about half of what it was at its peak. So if you're investing at the top, you could lose a lot more money than if you had invested at the bottom. And then it has the potential for negative environmental impact, as we had explored earlier. One more thing that I'll add into that cons list is that it's very influenced by what's going on in the news in ways that other investments like real estate or traditional stocks aren't. So an example of that is Elon Musk. He's the founder and CEO of Tesla, SpaceX, and a lot of people look at him for their decisions. So this is just a chart on how Elon Musk's tweets have moved the prices of Bitcoin. As I said earlier, Tesla had stopped accepting Bitcoin, and with that, it began to fall and fall quite a bit. And unlike you don't really see this with other traditional stocks or real estate investments where single tweets can stop or can drop the value of their shares or the investments. And then uh, Elon Musk kept tweeting, the price kept going down. So it just goes to show how much single people and how much what's happening in the news can affect the price of Bitcoin. And then here it is at the end. Tesla says it would accept Bitcoin again, and it starts to creep back up. Thanks for listening. And then if you need a little bit more help with technology, make sure to book a session with seniors by either going to our website or calling into our phone number.